this is bubble territory. And by the way, I'll even go on record and say this is the same sort of thing. The atmosphere in the market is the same as when I called the top in Bitcoin at 69,000 in 2021. It is exactly the same psychological sentiment out there. Until you get Bitcoin to really be accepted as a digital gold, it won't fully diverge from stocks. But again, slowly, I mean, there are people out there, including myself, that are looking at it more and more like the digital gold. I just think that there's a lot of people in there that are trying to make easy money, and those are the people that have to kind of be flushed out first, and those will be the ones that kind of cause the selling when the selling does come in.
Historically, Bitcoin has displayed correlations with traditional financial markets, particularly during periods of market turbulence. The recent rise of Bitcoin, triggered by the launch of Bitcoin exchange-traded funds and made stronger by the economic conditions in the US, shows the cryptocurrency's growing prominence as both a speculative asset and a potential hedge against inflation. Meanwhile, in a recent report from the US Department of Labor, it was revealed that the country's Producer Price Index, which measures the prices received by producers of domestic goods and services, experienced a notable increase of 0.3% for the month. This suggests that there has been an increase in inflation in the country. While this significant uptick surpassed expert expectations, the market response appeared relatively subdued, with minimal movement observed. Notably, earlier in the week, there was more significant activity in the stock markets following the release of the Consumer Price Index numbers. In an in-depth discussion with David Lin, expert analyst Gareth Soloway points to instances where significant movements in the stock market, such as Consumer Price Index numbers, have coincided with heightened activity in Bitcoin trading. And despite acknowledging long-term potential in Bitcoin, Soloway foresees a possible correction in both Bitcoin and the stock market. Soloway predicts that if the stock market experiences a significant downturn, Bitcoin prices could also decline as investors seek safer assets. Let's look at some clips of Gareth Soloway as he shares his in-depth analyses of Bitcoin, the stock market, and certain economic conditions that may impact both assets. We encourage your engagement as we view these clips. By liking, commenting, and subscribing to our channel, you are giving us the support we need to continue providing you with informative updates on cryptocurrencies and finance. We hope you enjoy the video.
So we had the ETF launch, and that hype, again, hype is hype. Whether it's in Bitcoin, whether it's in NVIDIA, whether it's in any of these things, it drives it to these crazy levels, overbought, and then you get kind of the sell the news event. And that's exactly what we saw in that. I happened to be short at that time. We got out just around this, just below 39,000 down here. And the beautiful thing about this is it created this, look at this channel. You have the highs here connected to these highs and this low connected to these lows, and look at what we just hit on Bitcoin. So believe it or not, I initiated a new short just up here, very small position, just to kind of a dipping the toe in the water type thing. But again, the idea being is we'll see a pullback off of this. And now the recent run in Bitcoin, to me, it's not so much about the ETF anymore. That's out there. I think there's still a lot of hype about it. It's partially about the halving coming up, but it's also about money, right? It's about risk assets. When you see SMCI going up hundreds of percentage points in a couple of weeks, when you see NVIDIA doing what it's doing and the tech sector doing what it's doing, money is going to find other risk assets to participate. And I think that's what's driven up Bitcoin recently. Now, is there fundamental long-term reasons to be long Bitcoin? Absolutely. But again, my thesis is that if we see a 20-30% correction in Bitcoin, in the stock market, which would be kind of run-of-your-mill after the Nasdaq's up, 60% since October of 2022, you then have to talk about Bitcoin possibly coming back to 30 to 32,000 on the charts. Well, I think the kicker is this, right? Is that I'm a trader, so number one. So again, right here, I have a trend line. I short it. I buy support. If it comes down to the lower level, we'll buy support as well. But I think my point is this, is that when you look at the kind of the froth in the system, and right. Remember what I said earlier in this interview, folks, it's one of the biggest calls I'm known for of nailing the Bitcoin top at 69,000 is that when I see social media behaving like it is behaving, it is exactly like that in stocks, not so much in crypto, but in stocks in particular, as those same indicators back then. And that is a warning sign of, the people saying, hey, you can just close your eyes and throw a dart at a dartboard and you'll get a winning stock and you'll make money. And that's a concern to me. So I do think we're kind of coming into a risk-off environment. How big of a pullback, I don't know. But I do think on that, Bitcoin will just sell off just naturally as a risk asset. You have fundamentally something like Bitcoin, 21 million will only be in existence. So longer term, I think it performs really, really well. But again, for me, I look at shorter term time frames. And right now we're kind of in the frothy zone, mainly on the stock market. But I think with the stock market pulling back, Bitcoin likely would get a pullback here as well. Until you get Bitcoin to really be accepted as a digital gold, it won't fully diverge from stocks. But again, slowly, there are people out there, including myself, that are looking at it more and more like the digital gold. I just think that there's a lot of people in there that are trying to make easy money, and those are the people that have to kind of be flushed out first, and those will be the ones that kind of cause the selling when the selling does come in. And I'm curious with you, I still think it'll sell off. Historically, you actually do see some selling pressure after the halving. It's almost like a hyped up thing, and then you see the kind of the relaxation. The halvings are really important, but it's more of a elongated type thing where that supply just gets cut less and less. And so as demand increases over the longer term, that's where price will generally continue to trend upside. But that doesn't mean that you're not going to get these blips where you see a 10-20% correction like we just saw following the spot ETF. And those will continue to happen in Bitcoin. I even think, again, if the stock market really gets in a risk-off period, we'll get a bigger correction in Bitcoin, potentially down to that 30 to 32,000 level.
On Tuesday, Henry Allen, a macro strategist at Deutsche Bank, stated that if inflation continues to stay above the Federal Reserve's target of 2% for an extended period, it's increasingly probable that expectations will rise. The University of Michigan reported on Friday that consumers anticipate inflation to reach 3% in the coming year, marking an increase from their previous forecasts. This upward trend in expectations aligns with recent inflation indicators, demonstrating that inflation is persisting more than initially anticipated, as evidenced by last week's higher-than-expected consumer price index readings. The expectation of prolonged inflation above the Federal Reserve's target could potentially impact Bitcoin in several ways. If investors perceive traditional fiat currencies to be losing value, they may seek alternative stores of value like Bitcoin, which is widely perceived as a hedge against inflation. Additionally, persistent inflation may affect people's confidence in traditional financial systems and drive more individuals towards decentralized cryptocurrencies. But rising inflation could potentially have negative implications for Bitcoin as well. If inflation leads to higher interest rates set by central banks, it may increase the cost of borrowing and reduce overall investment activity, impacting Bitcoin's price. Let's view more clips of Gareth Soloway as he shares his expert insights regarding inflation, recession, the Federal Reserve's monetary policy, and the potential impact on the stock market and Bitcoin.
If you have higher inflation, but then you start seeing an unemployment spike, yes, there's going to be pressure on the Fed, but the Fed has to weigh the risks of causing inflation to have another super spike by cutting too much and creating too much liquidity versus obviously having a slightly elevated unemployment rate. Like, so for instance, if you told me that we were going to have a 10% unemployment rate, heck yeah, the Fed would be cutting like crazy. But if it's an uptick from the threes where we are now to 5%, the Fed may be a little kind of, holding back in terms of cutting because they don't want to create that next wave of inflation like we saw in the 1970s. The other thing to keep in mind is why is rate cuts in a recessionary environment maybe not the best is because it's actually, if you have a recession, it's actually telling us that stocks like Microsoft and Apple, people aren't going to be able to afford buying their products. The consumer is going to pull back, which means earnings start to drop, and obviously the forward-looking PE ratio for the S&P starts to get less and less, or in terms of too lofty a valuation. So to be honest, it's not necessarily a linear line with just all rate cuts are good. It has to be under what circumstances. So what the market was prepping for initially before CPI and PPI this week was we're going to have a perfect landing. There's no landing. The economy is going to stay strong, and the Fed is still going to cut rates. That's a great scenario for stocks, right? That's like the best of all worlds. But now it's getting a little bit trickier, and this is where things that have gotten into bubble territory may start coming in very, very quickly. I think if we started to see a really bad recession, then inflation does get down to the point where it could be deflationary. But if we go into kind of one of these stagnant markets where, for the most part, we're in a slight recession. It's kind of things are slow, things are kind of for a long period of time, where you're not really seeing a huge drawdown in the economy where it's a deep recession, then I think you have the pressures of increases in wages that still get passed through. And we've seen that, by the way. I think the PPI is showing us that, the CPI is showing us that producers, they're paying so much extra. You have people that were making a minimum wage that are now making 2 to 3 times that minimum wage. That has to be passed on to the consumer to keep the earnings flowing from a lot of these big companies. And so it's not a one-year event, right? I mean, if you pay someone $20 instead of $10 an hour, you can't really just double the prices that you're charging your consumers. But what you do is you say, okay, well, I'll raise it by 33% this year, 33% the next year, and the next year as well to bring my profit margins back in alignment. So I think that's the kicker, is how bad is the recession and what do we see? In fact, based on what we've seen recently, and I'm showing my S&P chart, I'm actually more confident that a recession is on the horizon. The retail sales this week alone showing a consumer that is slowing down much quicker than expected. You look at, again, credit card debt and all these other factors, including the government spending, right? I mean, government spending can lift us for a certain amount of time, but it's at some point there has to be handcuffs even put on that, where otherwise it's going to cause major issues down the line. So I am confident that we will see a recession. The question is it second half of this year or is it before then? But I do think by the end of this year we will see that recession. On the S&P 500, again, to see these type of runs, very, very unusual to see a run this vertical on the S&P 500. Again, if you look at the stocks in the NASDAQ, what's been leading? There's been a few stocks that have been carrying this market higher. Everything else is struggling, and that is also a concern. So again, then you look at China, you look at what their economy is doing, and obviously they're stimulating, but what are they going to export in terms of a slowdown to us? Because it is global. We are in a global environment at this point.
Spot Bitcoin ETFs have recently seen a significant increase in daily trading volume and inflows, as confirmed by AMB Crypto. According to the crypto analysis tool Sentiment, the combined volume of 7 ETFs reached $6.94 billion, marking the highest daily volume since the SEC approved the ETFs in January. The surge involved issuers such as Bitwise, Fidelity, BlackRock, and ARK21 Share, along with others like Invesco Galaxy, VanEck, and Grayscale. Meanwhile, Bitcoin still hovers around $51,000 to $52,000, and many experts are debating as to whether the digital asset's price will continue to surge or will fall in the coming months. Looking ahead, Soloway does not believe that Bitcoin will not be able to reach its previous highs anytime soon, and suggests a buying strategy around the $30,000 to $32,000 level. Meanwhile, other experts remain bullish. Max Keiser, a prominent Bitcoin proponent and financial journalist, has recently shared an extremely optimistic outlook on Bitcoin. In his bullish post, Keiser forecasts that the price of Bitcoin could surge beyond $500,000. He believes this is possible as he anticipates a major crash in the US stock market, much similar to the crash experienced in the late 1980s. Keiser expects a massive correction in the stock market, given its recent peak levels. With inflation impacting traditional markets and cryptocurrencies like Bitcoin, it's advisable to maintain a diversified investment portfolio and closely monitor market developments. Insights from experts such as Gareth Soloway and Max Keiser offer valuable perspectives on potential market shifts and Bitcoin's future trajectory. By adopting prudent investment strategies, conducting thorough research, and taking a long-term view, investors will be able to make more informed financial decisions. Do you agree with Gareth Soloway's insights? How about Max Keiser's? Feel free to share your thoughts in the comments section. We appreciate your input. Remember to give us a thumbs up, share this video, and subscribe to our channel for more valuable content on cryptocurrency finance. Stay alert, think smart, and protect your investments. See you next time, and happy investing.